Welcome to the Deep Dive. Today we're going to be breaking down Bajaj Finserv's Q2 FY25 results.
Ooh, exciting.
Yeah, so we've got their investor presentation and some recent news articles to dig into.
Looking forward to it.
And we're going to try to extract, those like golden nuggets.
Yeah, the insights.
The insights, yeah, for you guys so that by the end of this, you'll have like a crystal clear picture of Bajaj Finserv's current state and where they might be headed.
It's fascinating to see how they're really trying to position themselves in the market, right? They're not just like dipping their toes into financial services.
Yeah.
They're like aiming to be the,
The one-stop shop.
one-stop shop. Exactly.
Yeah, like the financial services Swiss Army knife or something.
Totally. I mean, they've got everything, from loans to insurance,
Yeah.
wealth management, even healthcare now.
Yeah, it's pretty crazy. And what's impressive is their reach. They have a massive presence in India. Thousands of locations for Bajaj Finance. Hundreds of branches for Bajaj Allianz Life Insurance. I mean...
Yeah, they're not messing around. They're really going for that pan-India
presence, yeah.
financial powerhouse.
So let's dive into the numbers. Their Q2 FY25 revenue was a staggering 33,703 crore.
Wow.
That's a 30% jump year on year.
Huge.
And their profit after tax, the money they actually made, also increased by 8%, reaching 2,087 crore.
But here's where it gets interesting, right? Because those profit figures actually include some...
Paper losses.
Yeah, paper losses from investments. If you kind of like take those out, their operational profit actually grew by 11%. So this tells us, they're running a pretty tight ship and they're making money from their core businesses.
Yeah, that's a great point. It's like peeking behind the curtain, right?
Yeah.
Seeing how the business is really performing.
Exactly.
Now, when we look at where this revenue is coming from, Bajaj Finance is the biggest contributor, followed by their general and life insurance businesses. So this mix of revenue streams, is a sign of a well-diversified financial services group.
Absolutely.
Okay.
Now, to really understand Bajaj Finserv, we need to kind of break down their individual subsidiaries.
Go.
Let's start with Bajaj Allianz General Insurance, often called BGIC.
Okay.
Their goal is pretty straightforward. They want to gain market share by offering a variety of insurance products and being smart about the risks they take on.
And it looks like their strategies, working their gross written premium, basically the total value of premiums they collected decreased by 20%.
Right.
But this was mainly due to some timing shifts in their government health business, which will likely even out in the next quarter.
Yeah, and if you exclude those more volatile segments, right, their growth is a solid 11%.
Oh, wow.
Which is even better than the overall industry growth.
Okay.
So they're actually outperforming their competitors.
And they're not just sitting still. They're actively investing in technology to improve the customer experience. They've got AI-powered digital services and even multilingual voice bots to help people file claims.
It's a smart move, especially in a country as diverse as India, right? Shows they're thinking about how to make insurance accessible and easy to use for everyone.
Yeah.
Now let's talk about Bajaj Allianz Life Insurance, or BALIC for short.
Okay.
Their focus is on sustainable and profitable growth, and they're particularly keen on increasing the value of new business they bring in.
And they are absolutely crushing it in that area. They achieved a remarkable 34% growth in individual rated new business. That means they're bringing in a lot more valuable customers than their competitors.
Absolutely. Their overall new business value growth was a bit more modest at 3% due to a higher proportion of unit-linked business, which tends to have lower margins.
Okay.
But their persistency rate, the percentage of customers who keep their policies, is incredibly strong at 85%.
Wow.
That tells you that their customers are happy and they're sticking around.
And their success across multiple distribution channels, think agents, direct sales, institutional business, shows they're not putting all their eggs in one basket. They're reaching customers in a variety of ways.
Now let's talk about Bajaj Finserv Health, which I find particularly interesting. Their mission is to bring together the fragmented healthcare ecosystem in India, using technology and financial services to streamline things.
Okay.
They recently acquired a company called Vital Health, which significantly strengthens their position in this space.
And what's really cool is their approach to healthcare. They're not just focused on treating illness, they're also emphasizing wellness and preventative care.
Yeah.
They offer a complete range of services covering everything from doctor consultations and diagnostics to hospital stays.
And their provider network is incredibly extensive, with over 100,000 doctors and 16,000 hospitals on their platform.
It's like you're creating this
one-stop shop.
Yeah, one-stop shop for all your healthcare needs.
Exactly.
It's a bold vision.
Yeah.
I think their focus on technology and personalization will be key to their success.
Absolutely.
Now let's move on to Bajaj Finance Limited,
Uh,
the flagship company of the Bajaj Finserv Group.
Okay.
Their strategy is to offer a wide range of financial services, from consumer loans to business financing.
And they're incredibly good at what they do. They achieved a phenomenal 29% growth in their assets under management, AUM, and a 13% increase in their profit after tax. This tells us that they're not just growing their loan book, they're also managing their risks effectively and maintaining profitability.
But it's not all smooth sailing,
Right.
right? I mean, their loan losses are a bit higher than they'd like.
Yeah, which isn't surprising given the current economic climate.
Yeah.
But they're being proactive about managing these risks by adjusting their lending practices and being more selective about the types of loans they're making.
So it's all about finding that balance, right?
Exactly. Growth and risk management.
Now, another subsidiary worth mentioning is Bajaj Housing Finance Limited. They recently went public through an IPO, which reduced Bajaj Finance Limited's shareholding.
Yeah, they are.
And they're focused on building a low-risk balance sheet and generating steady returns for their investors.
And I really like their focus on the mass affluent customer segment, right?
Yeah, that's interesting.
These are people who have, a decent income, but might not be considered wealthy.
Okay.
And Bajaj Housing Finance is tailoring their offerings to meet the specific needs of this growing segment.
It's smart because that segment's often overlooked by traditional financial institutions.
Exactly.
And their strong capital adequacy ratio, which basically measures their financial strength, reinforces their commitment to stability and responsible lending practices.
Yeah, absolutely.
So they're not just chasing growth, they're being mindful of the risks involved.
Right.
This balanced approach, I think, is a good sign for their long-term prospects.
Agreed.
Now, before we move on to the next section, I think it's important to touch on Bajaj Finserv's commitment to environmental, social, and governance, ESG factors.
Yes.
This isn't just a buzzword for them. They're genuinely trying to build a sustainable and responsible business.
Absolutely. Their ESG policy covers a wide range of areas, from promoting financial inclusion and protecting the environment to empowering women and ensuring ethical governance. It's a comprehensive approach that really reflects their understanding of the role businesses play in society.
And it's not just lip service. They're backing up their words with concrete actions. They've invested heavily in renewable energy. They're promoting financial literacy among underprivileged communities, and they're supporting various social welfare initiatives.
They're also walking the talk when it comes to diversity and inclusion.
Yeah.
They're actively promoting gender diversity within their workforce and their insurance agent network. They understand that a diverse and inclusive workplace is not just the right thing to do, but it's also good for business.
And their efforts to improve customer centricity are paying off. Their grievance ratios, which measure customer complaints, are incredibly low.
Yeah, it's impressive.
This indicates that they're focused on providing a positive customer experience and addressing any issues promptly.
And they're investing heavily in their employees as well. They've implemented robust training programs to upskill their workforce and create a culture of continuous learning. And they have a zero-tolerance policy for workplace harassment, ensuring a safe and respectful work environment for everyone.
It's clear that Bajaj Finserv is committed to building a sustainable and responsible business for the long term. They understand that financial success is not just about profits, it's also about making a positive impact on society and the environment.
Now, to fully grasp Bajaj Finserv's performance, we need to look at the bigger picture of the Indian financial services landscape.
Okay.
India is a hotbed of opportunity right now, with rapid digitization driving massive growth in fintech, insurance, insurtech.
It's incredible how quickly things are changing. The fintech sector alone is projected to reach $1 trillion in assets under management by 2030, and that's just the tip of the iceberg.
Government initiatives like the Ayushman Bharat Digital Mission, ABDM, are also playing a crucial role. They're creating a digital backbone for the healthcare system, making it easier for companies like Bajaj Finserv Health to reach a wider audience and provide innovative solutions.
And it's not just about digital health. Investments in technology are booming across the entire financial services sector in India. This is creating a fertile ground for innovation and disruption. And Bajaj Finserv is right at the forefront of this revolution.
The Open Network for Digital Commerce, ONDC, is another exciting development.
Yeah.
This initiative is essentially creating a level playing field for e-commerce, connecting buyers and sellers from various platforms. It's a game changer that could significantly expand the reach of financial services and digital payments.
And let's not forget about the rising income levels in India and the government's focus on financial inclusion initiatives like Aadhaar And the Unified Payments Interface, UPI, are bringing millions of people into the formal financial system, creating a massive new market for companies like Bajaj Finserv.
It's a dynamic and rapidly evolving landscape, and Bajaj Finserv seems to be well positioned to capitalize on these trends. They have the vision, the resources, and the agility to be a major force in the future of Indian finance.
All right, we've covered a lot of ground in this first section. We've looked at Bajaj Finserv's overall performance, their key subsidiaries, their commitment to ESG, and the exciting opportunities in the Indian financial services market.
In the next section, we'll delve deeper into their specific product offerings, analyze their performance against their competitors, and examine their risk management practices.
So stay tuned.
Stay tuned.
All right, so we set the stage. Let's zoom in on Bajaj Finserv's product offerings. I'm curious to see how their products are actually performing in the market.
Well, their insurance portfolio is a great place to start. It's incredibly diverse, covering everything from, the everyday needs of individuals and small businesses to the more complex requirements of large corporations.
So they're not just offering one-size-fits-all insurance solutions.
Definitely not. Bajaj Allianz General Insurance, or BAGIC, as it's often called, offers everything from car and home insurance to health and travel insurance. They even have specialized products like pet insurance and cyber insurance, which are becoming more and more important these days. And they haven't forgotten about the agricultural sector either. They offer crop insurance for farmers, which is crucial in a country like India.
It sounds like they're really in tune with the evolving needs of their customers. And on the life insurance side, what does Bajaj Allianz Life Insurance, or BALIC, have to offer?
BALIC has a comprehensive suite of products that cater to various life stages and financial goals. They cover everything from life protection and health insurance to retirement planning and wealth creation, for example. They have products like Bajaj Allianz Life Smart Wealth Goal 2 and Bajaj Allianz Lifelong Life Goal, which are designed to help people achieve their long-term financial aspirations.
So they're not just about protecting you from risks, they're also helping you grow your wealth.
Exactly. They're moving on to the lending side of the business. Both Bajaj Finance Limited and Bajaj Housing Finance Limited offer a variety of loan products.
What kind of loans are we talking about?
Well, Bajaj Finance Limited, or BFL, caters to a wide spectrum of borrowers, from consumers to small businesses to large corporations. They offer everything from loans for consumer durables like appliances and electronics to business loans and loans against property. They even have a microfinance arm that provides small loans to individuals and small businesses in rural areas.
So they're really covering all the bases when it comes to lending. What about Bajaj Housing Finance Limited? Are they focused on home loans primarily?
Yes. BHFL's main focus is on home loans, and they have products designed for both salaried individuals and self-employed individuals. They also offer specialized products like lease rental discounting, which is a way for property owners to get financing based on their rental income, and developer finance, which helps real estate developers fund their projects.
It sounds like they've got a loan product for every need in every stage of life.
Now let's see how some of these subsidiaries stack up against their competitors. Let's start with BAG. Over the past 5 years, their gross written premium has grown at an average rate of 13.2% per year. This is known as their compound annual growth rate, or CAGR, and it's a key metric for measuring growth over time.
So they're growing their business faster than the overall market.
Exactly. The industry average CAGR for gross written premium is only 10.1%. This means BAG is gaining market share and attracting more customers than their competitors.
That's impressive. But growth isn't everything. What about their profitability? Are they making money?
Well, to understand profitability in the insurance business, we need to look at something called the combined ratio. This ratio essentially tells you how much money an insurance company spends on claims and expenses for every dollar of premium they earn.
So a lower combined ratio is better, right? It means they're keeping more of the premium they collect as profit?
You got it. And BAGI has a phenomenal combined ratio. Their 5-year average combined ratio is 99.6%. This is incredibly low, especially when you compare it to the industry average of 117.5%.
Wow, that's a huge difference. So for every 100 rupees in premium they collect, they're only spending 99.6 on claims and expenses. That's a recipe for success.
Absolutely. Their combined ratio is a testament to their strong underwriting discipline and their ability to manage their costs effectively, and their profitability shines through even more when you look at their cumulative underwriting profit over the past 5 years. BALIC has actually made a profit from underwriting, while the industry as a whole has reported significant underwriting losses. This means BALIC is really good at assessing and pricing risks, and they're not losing money on the insurance policies they're selling.
So they're growing faster than their competitors, and they're more profitable.
Yeah.
That's a winning combination.
Now let's move on to BALIC. Their 5-year CAGR for individual rated new business, IRNB, is a whopping 29%, which is significantly higher than the industry average of 10%. This metric tells us how quickly they're growing the value of new business they're bringing in, and it's a clear indicator of their success in attracting new customers.
So they're growing their customer base much faster than the average life insurance company in India.
Precisely. And their gross written premium has also grown at a healthy pace, achieving a 5-year SEC-GR of 21%. This is another sign of their strong market position and their ability to attract new policyholders.
But what about their financial strength? Are they well capitalized and able to meet their obligations to their policyholders?
Absolutely. Their solvency ratio, which measures their financial strength, is a whopping 432%. This is well above the regulatory requirement of 150%, and it's a clear indication of their financial stability and their ability to withstand any potential shocks to the market.
So if you're looking for a life insurance company that's financially sound and growing rapidly, Balik seems to tick all the boxes.
Now, beyond these impressive growth and profitability numbers, there are a few other highlights worth mentioning. For example, BALIC is the fastest growing private life insurance company among the top 10 players in India, which is a remarkable achievement considering the competitive landscape.
So they're not just a big fish in a small pond. They're competing with the best and coming out on top. That's impressive.
And they also have the highest solvency ratio in the entire industry, which, as we discussed, is a great indicator of their financial strength. They also have a very low grievance ratio, meaning their customers are generally happy and don't have many complaints.
That's always a good sign. It shows they're focused on providing excellent customer service.
And their group protection business is also thriving. They covered 21 million group lives in fiscal year 2024, ranking 5th among private players in this segment. This indicates they're successfully catering to the needs of corporate clients as well.
Okay, so we've looked at BAJIC and Balik from a high level, but let's get a bit more granular. How are they performing across different lines of business?
That's a great question. Let's start with BAG and their net loss ratios, which give us a good indication of how well they're managing their risks in different segments. For example, in Q2 FY25, their net loss ratio for motor insurance was 68.8%. This includes both own damage claims, which are claims for damage to the insured vehicle, and third-party claims, which are claims for damage caused by the insured vehicle to another person or property.
So for every 100 rupees they collected in motor insurance premiums, they paid out 68.8 in claims. Is that good or bad?
Well, it's certainly better than it was in the same quarter last year when their net loss ratio for motor insurance was 76.6%. This improvement suggests they've become more efficient in managing their motor insurance portfolio and are pricing their policies more accurately.
That's encouraging. What about their performance in health insurance?
Their net loss ratio for health insurance in Q2 FY25 was 95.5%, which is a bit higher than the 88.2% they recorded in the same quarter last year.
So they're paying out more in health insurance claims than they did before. What could be driving that?
It could be a few things: rising healthcare costs, an increase in the utilization of health insurance services, or even changes in the types of health insurance policies they're selling could all contribute to a higher loss ratio. But it's important to remember that health insurance is a complex business, and loss ratios can fluctuate from quarter to quarter.
Okay, fair enough. What about their crop insurance business? How is that performing?
Their net loss ratio for crop insurance in Q2 FY25 was 93.8%, which is a significant improvement from the 113% they recorded in the same quarter last year.
Wow, that's a big jump in the right direction.
Right.
What do you think is behind this improvement?
It likely reflects their efforts to refine their underwriting practices and implement better risk management strategies for crop insurance. Crop insurance is inherently risky because it's tied to unpredictable weather patterns and other agricultural variables. So it's good to see that they're getting a better handle on this challenging line of business.
It's interesting to see how their performance varies across these different insurance segments. It really highlights the different dynamics of each market now beyond loss ratios. How else can we compare BHG's performance to the industry?
Well, another key metric is gross direct premium income, GDPI growth.
Right.
This essentially measures how much new premium income they're generating compared to the overall market, for example, in Q2 FY25. BGG's GDPI growth in the motor insurance segment was 4%, which is slightly lower than the industry growth of 6.2%.
So they're growing their motor insurance business, but not quite as fast as the overall market. What about other segments?
In the retail health insurance segment, their GDPI growth was a strong 19.3%, significantly outpacing the industry growth of 11.4%. This tells us they're doing a great job of attracting new customers in the rapidly growing retail health insurance market.
And what about group health insurance? How did they fare in that segment?
Their GDPI growth in group health insurance was even more impressive, a whopping 33.3% compared to the industry's decline of 2%. This suggests they're not just winning new corporate clients, they're also retaining their existing clients and expanding their group health insurance business.
That's a really positive sign. It looks like they're strategically focusing on high-growth segments and capturing market share. Now, all this growth is great, but it's crucial to understand how they're managing their risks. What can you tell us about BAGC's risk management practices?
Well, BAGC has a very prudent approach to risk management. They start by ensuring the quality of their asset portfolio. For example, 96.5% of their debt portfolio consists of AAA-rated and sovereign assets, which are considered very low-risk investments.
So they're not gambling with their investments, they're sticking to safe and stable assets.
Exactly. And their equity investments are also strategically allocated. A large portion of their equity portfolio is invested in blue-chip companies listed on the Nifty 50 and BSE 100 indices, which represent some of the largest and most established companies in India.
This conservative approach to asset allocation helps them minimize their exposure to market volatility and protect their capital.
And their risk management practices extend beyond their investment portfolio. They have robust pricing and underwriting processes that are designed to ensure sustainable profitability. Their granular loss ratio modeling takes into account various factors like geography, distribution channels, car make and model, and the age of the insured vehicle to ensure they're pricing their policies accurately.
So they're using data and analytics to assess and manage their risks more effectively.
Precisely. They also have a strong track record of fraud detection and loss mitigation. They use data analytics to identify potential fraud and have a dedicated team that investigates suspicious claims, and their diversified exposure across various business lines and geographies helps them spread their risks and reduce their reliance on any single market or product.
So they're not putting all their eggs in one basket.
Exactly. They're spreading their bets to minimize their exposure to any single source of risk. Now, another important aspect of risk management for insurance companies is reinsurance. Reinsurance is essentially insurance for insurance companies. It helps them transfer some of their risks to other companies, protecting them from large-scale losses.
So it's like a safety net for insurance companies. What's BAGX reinsurance strategy?
BAGC takes a very cautious approach to reinsurance. They only cede reinsurance, which means they only transfer risks to highly rated reinsurers, including A-rated and above reinsurers, AA-rated foreign reinsurers, and the General Insurance Corporation of India, which is a government-owned reinsurance company.
So they're being very selective about their reinsurance partners.
Absolutely. They're making sure they're partnering with financially strong and reliable reinsurers to ensure they can meet their obligations even in the event of a major catastrophe. And their reinsurance program is structured to strike a balance between risk retention and risk transfer.
What does that mean exactly?
It means they retain a portion of the risk themselves, which allows them to benefit from profitable business lines, while also transferring a portion of the risk to reinsurers to protect themselves from catastrophic losses. And they have robust processes in place to monitor their risk concentration and ensure they're not overly exposed to any specific geographic region or type of risk. This helps them maintain their financial stability.
Okay, so they're being smart about how they use reinsurance. What about their reserving and solvency practices?
Their reserving methodologies are designed to ensure they have adequate provisions to cover future claims, even for long-tail claims like motor third-party liability, which can take years to settle. And their solvency margin, which is a measure of their financial strength, stands at an impressive 312%.
Wow, that's more than double the regulatory requirement.
Yes, and it's a testament to their strong financial position. Their solvency margin provides a substantial buffer to absorb potential losses and reinforces their financial resilience.
It sounds like BAGIC has a very comprehensive risk management framework in place. They're clearly not taking any unnecessary risks and are doing everything they can to protect their policyholders and their business. Now, let's shift gears and talk about BALIC's risk management practices. Life insurance is a different beast altogether, right? So how do they manage their risks?
You're right. Life insurance has its own unique set of risks. BALIC has a robust risk management framework in place to address these challenges. For example, Their product pricing methodologies are very rigorous. They incorporate prudent assumptions and undergo extensive stress testing to ensure their products remain profitable even under adverse economic conditions.
So they're not just slapping on prices, they're carefully considering all the potential risks and making sure their pricing is sustainable in the long term.
Exactly. And they regularly review their pricing strategies based on prevailing interest rates and market conditions to ensure their products remain competitive while maintaining adequate margins for profitability.
That makes sense. What about their ongoing risk management practices? How do they monitor and manage risks once a policy has been sold?
Well, they use conservative interest rate assumptions in their reserving calculations to ensure they have enough money set aside to cover future claims. They also conduct regular product condition monitoring, sensitivity analysis, and stress testing to identify any potential vulnerabilities and make necessary adjustments to their product offerings and risk management strategies.
So they're not just setting it and forgetting it, they're constantly monitoring and adjusting their approach based on changing conditions.
Absolutely. They're also very mindful of their business mix, which is the proportion of different types of policies they sell. They ensure they maintain a balanced portfolio of products to avoid concentration risk, which is the risk of being overly exposed to any specific product category.
So they're diversifying their product mix to spread their risks.
Precisely. And they manage mortality risk, which is the risk of policyholders dying sooner than expected, through diligent underwriting practices, data-driven risk scoring, and appropriate reinsurance arrangements. They also have board-approved principles for managing product guarantees, which provide clear guidelines for handling potential liabilities associated with guaranteed products like annuities.
That's a lot to consider. It seems like they're really thinking through all the potential risks and putting safeguards in place. Now, one area I'm particularly interested in is asset liability management, or ALM. It's crucial for life insurance companies, right?
It is indeed. ALM is all about matching the maturities of their assets, which are their investments, with their liabilities, which are their obligations to policyholders. This helps them ensure they have enough cash on hand to pay claims as they come due, especially for products with guaranteed benefits.
And BALIC has a well-defined ALM framework, right?
They do. Their ALM framework is designed to mitigate interest rate risk, which can significantly impact the value of their investments and their ability to meet their liabilities. They manage this risk through a combination of partly paid bonds and forward rate agreements.
Those sound like pretty sophisticated financial instruments.
They are, but essentially these instruments help BALIC lock in interest rates and protect their portfolio from fluctuations in the market. And for their annuity products, which are designed to provide regular income payments to policyholders, they continuously monitor their business mix across different variants, age bands, and deferment periods to manage longevity risk.
What is longevity risk exactly?
It's the risk that people will live longer than expected, which could increase the cost of paying annuity benefits by monitoring their annuity business closely. BALIC can adjust their pricing and reserving assumptions as needed to ensure they can meet their obligations.
It sounds like they've got all the bases covered when it comes to ALM overall. BALIC's risk management framework appeared to be very comprehensive and well thought out. They're clearly taking a proactive approach to managing risks and protecting their policyholders' interests.
Now let's move on to...
Wow, we've covered a lot of ground, haven't we? From their overall financial performance to, the nitty-gritty of their risk management practices, we've really gotten under the hood of Bajaj Finserv.
And I think what's become clear is that this is a company that's not afraid to innovate and adapt, to the changing landscape of financial services.
Absolutely. Their commitment to technology and customer experience really stood out to me.
Right.
They're not just using technology to, automate processes.
Right.
They're using it to create new products and services that are truly customer-centric.
Their 3-in-1 app for Bajaj Finance is a great example of this. They've essentially created a digital ecosystem where customers can manage all their financial needs in one place.
It's pretty amazing.
From loans and investments to insurance and payments.
And their marketplace platform, Bajaj Markets, is another example of how they're leveraging technology to disrupt traditional models.
Yeah.
They're giving consumers more choices, more convenience, and a more personalized experience.
It's a smart move that positions them well for the future, especially in a market like India where digital adoption is accelerating so rapidly.
Their focus on financial inclusion is also commendable. They're not just catering to the wealthy. They're actively working to bring financial services to underserved communities.
Their efforts to provide loans to new-to-credit customers and promote financial literacy are making a real difference in people's lives. They're empowering individuals and small businesses to participate more fully in the economy.
It's not just about doing good. It's also a smart business strategy by expanding their customer base to include those who were previously excluded from the formal financial system. They're tapping into a massive untapped market.
And let's not forget their impressive track record of organic growth. They haven't relied on acquisitions to fuel their expansion. They've achieved this impressive growth through, strategic planning, smart execution, and a deep understanding of their target markets.
This ability to grow organically is a testament to their strong leadership and their entrepreneurial spirit. It suggests they have a sustainable business model that can adapt and thrive in the long term.
Now, as we wrap up this deep dive, I think it's worth considering the bigger picture. How might Bajaj Finserv shape the future of financial services in India?
That's a great question. We've seen how they're already disrupting traditional models and embracing new technologies. What do you think their impact will be in the years to come?
Well, I believe their continued focus on technology and customer experience will be key drivers of innovation in the industry. They're setting a high bar for others to follow, forcing competitors to up their game and provide better services.
Their efforts to promote financial inclusion could also have a profound impact as they expand their reach to previously underserved segments. They'll be playing a crucial role in driving economic growth and empowering individuals.
And their commitment to ESG factors could set a new standard for responsible business practices in the financial services sector. They're demonstrating that you can be profitable and sustainable and that, doing good is good for business.
It's an exciting time for the Indian financial services industry, and Bajaj Finserv is right at the heart of it. They're a company to watch closely, not just for their financial performance, but for their impact on society as a whole.
So as you go about your day, think about how Bajaj Finserv's approach to technology, customer experience, financial inclusion, and ESG might influence your own financial decisions and the broader financial landscape.
That's it for our deep dive into Bajaj Finserv. We hope this episode has given you a clearer picture of this dynamic and ambitious company.
Thanks for joining us, and keep exploring. The world of finance is constantly evolving, and there's always something new to learn.